Kobus, thanks for joining us on Investment 360 tonight. I just wanted to, first of all, start off with some big news that we saw 2 weeks ago with the announcement that Gold Fields is going to unbundle its assets and put the most part of its South African assets into a new vehicle called Sibanye Gold and keep the rest of the assets, the offshore assets, in Gold Fields. I just wanted to see what the sort of perception was in the investment community around that, if it was essentially de-risking itself from South African risk, or if there was solid operational reasons for separating the two assets.
Yeah, look, I guess if you look at the two assets that they move into Sibanye, which is Kloof and Driefontein complex and the Beatrix mine, those are two mines that sort of ranked lower if you want to sort of draw up a structural margin curve of the company, i.e., what's the grade you get and what's the cost that you need to incur to actually get that ore out of the ground. Now, by doing this, they are actually improving the structural margin position of Goldfields X, the Sibanye portfolio. And ultimately, I think on the Goldfields side, they sit with, I think, about 73% of their portfolio basically outside of South Africa, and the rest here in the South Deep mine, which are in ramp-up phase. So I guess it is sort of moving assets into differentiating classes. And I guess one from an operational metrics perspective, and then maybe from a perspective of how will international investors maybe then rate this company that's got lower South African concentration basically in their portfolio, And I guess in the end of the day, the interesting thing that one will have to see is, the expected re-rating that in general is expected on the Goldfields portion. That would be more than a potential de-rating on the Sibanye portfolio. The Sibanye portfolio, the two assets is in a structural decline mode. We've seen their reserves are declining. It is getting tougher and tougher to sort of get the ore out of the ground. And I think if they really want to stall that decline, they will have to invest a lot more capital. And importantly, they will perhaps look for an external investor, additional investor, to sort of try and maybe beef up that portfolio, to be able to do more capital investment, to fund that capital investment, and potentially, may include another mine or two that's in the vicinity in that portfolio in time.
They've made an interesting choice of CEO. Neil Froneman from Gold One's joined that. Do you think there's going to be any room for a tie-up there between Gold One and Sibanye Gold?
Look, it's probably something that's on the cards. That one can't rule out, I guess, at this stage. Something else as well as, I guess, he knows the Chinese well, and some sort of partnership from that perspective. Also, I think one cannot rule that out. So there's potential and the possibilities, I guess, from that perspective. And maybe I think the idea is here, when you sort of strip those assets out and you put them separately, that they may attract a different type of investor and may get a different rating, opposed to where it sort of sits in the broader portfolio.
So the litmus test behind the idea was that by taking out the offshore assets, those offshore assets in the Goldfields vehicle would re-rate. If that doesn't happen, would you consider it's kind of missed its point in terms of the thinking behind separating the two companies?
Yeah, look, if you're skeptical about this, you can argue it's shuffling some deck chairs around. You are actually taking some of the assets out and you're adding cost to it. You got to pay another CEO, you got to pay more overheads and corporate costs and all other type of costs that portfolio would have shared as it is now in the Goldfields broader Goldfields stable. So if you can't sort of unlock value from a different perspective, i.e. to try and, as I said, do something more with it in terms of getting more capital in, and maybe try and do something with a mining asset in the vicinity, and then trying to do capital investment that you can actually access the ore in a better and more strategic way. Or you can have a more focused mining area, maybe on a smaller scale, that they can illustrate that they can be more effective is perhaps something. But yeah, it remains to be seen whether this will actually be a successful split up. I guess there is people out there that are skeptical about it and are arguing, you're just adding cost to the same assets.
At this point, are you owners of Goldfields shares?
Yes, we are.
So in terms of the split, you're gonna own the Sibanye shares, and obviously you can't really tell me what you're going to do, but I guess the thinking would be that if you thought Goldfields assets were superior, you'd obviously sell the Sibanye assets and buy the Goldfields assets. But the company gave an operational reason for including the South Deep operation in the Goldfields portfolio. Did you accept that reason, or do you think it should have been included in the Sibanye portfolio?
Look, I think it is a portfolio that's in ramp-up phase, as I said, so there's growth within that, and opposed to the other two, the KDC complex and Beatrix mine, in the Sibanye camp now is ex-growth, if you want to call it, as it currently stands. So it will require a lot more capital investment, I think, if you really want to try and sort of stop that decline that we've seen in reserve and production. So I think that is more the strategic reason ultimately why they've done that. And then, as I said, to give maybe better choice for investor on the type of asset they want to own.
Just in terms of turning our attention now to, I guess, the platinum industry, obviously big waves in the platinum industry this year with the events at Marikana. It turned the question on how well companies look after their employees and the living conditions, the social conditions attached to employees' employment. I heard a very strong comment the other day that by one analyst that I'll leave unnamed at this point, that believed that Lonmin had been closing their eyes by paying out a living out wage to their employees and essentially letting them take care of the living conditions. They closed their eyes to a big problem which eventually unfolded in Marikana. Quite strong words around that. Do you think where we are at the moment that the living conditions and the labour relations are going to be improved, and the framework for coming to agreements around wage settlements is going to be improved in the platinum industry specifically going forward?
Yeah, look, I mean, it is a very complex problem, and it's true, in the end of the day, where workers are given an option of a more formalised structure of living opposed to allowance, and then they go and settle in a very informal manner outside, which is not sustainable really in the long run. It is a major problem, but then it takes you back again. Do you force that onto workers? Do you tell them you don't have it, you will stay here? And it sort of gets to a area where there's a lot of complication around, I would argue. But I think ultimately what we've seen and what we've learned out of this is there will be more, and I think there should be more focus in terms of the environment around the mines and the living condition of people, because ultimately that impacts their productivity and what they can actually bring to the party when they actually come to work. And it's a fine balance that you got to get right. We're waiting on the outcome of the Farlam report, obviously, but I suspect some of the foundings and what we'll hear from that is that there will be a much greater focus on spend in terms of the communities, and try and uplift those communities and educate and try and take the whole benchmark sort of to a higher level, so to speak. And I think a complex problem also in these is the hostels, where you've got single hostels where it doesn't create the environment for a family, for instance. Now I know in many cases the worker comes, it's migrant workers as well, and they end up having two families also, and two families that they got to support, and the financial strain on them is also giving way to a lot of these other issues that we've seen playing out. So there's many complexities, as I said, on these type of issues. But I think one thing they learned out of this is they gotta think more about how they can work the environment towards sort of a better structure that will be more productive and that will create more stability within the workplace.
I know it's a tricky situation, and we obviously, I mentioned Lonmin there and they're closing hours, but obviously local government has a big role to play in it. In terms of going about your work as an analyst, and I understand that Stand-Up is a signatory to CRISA, and looking at responsible investing, sustainable investing, has it changed the way you do your work now, where you start to really look at the conditions that the labor force live in, the conditions that they work in, and try and understand that a bit more, perhaps better than in the past? Or is that something you've always considered and looked at the labor relations within a company and an industry?
Look, it's always been an important point, when you do engage with management and thinking about investing into companies, to get a full understanding of what is the structure around these type of social issues. What do they actually do to uplift the environment and the people within that environment? So it has been a key focus for us, and it speaks towards sustainability again. And ultimately, as we said, you want to get to a point where you can allocate your energy and resources into areas where it can be a win-win situation. There's many structures, I think, these days available, from banks and funding structures in terms of upliftment programs and housing, and where the company can almost just facilitate some of these type of developments. I think the one key thing that one got to remember also when you sort of create these communities around mines is what happens when a mine comes to the end of its life, and you end up with this social, almost like a social contingent liability in terms of the community that you've created, and there's no more work after a while in that community. And that's why the focus is also going to be more in terms of sustainability within that, and with regards to that, and uplifting the skills of the general community in those areas, so that you don't end up like the Rustenburg areas at the moment. Anglo American is due its review on Anglo Platinum. It's expected to come up somewhere in January. But and many people call for wide-scale cutbacks in production. But you've got massive communities around these areas, that's dependent on this work.
All right, we'll take a break here, and then after the break, we'll talk about the changing of the guard by the CEOs at the major mining companies, as well as the general demand for resources from China.